Good day to one and all. This is Dr. Sivaraman of iknowindices.com. Hope you are able to hear me. So I'll be presenting Asian session live market analysis. Good day to one and all. Asian session live market analysis webinar. Convinced based on their analysis they can do buy and sell trade, they can do it. Otherwise they can do the sell and buy trade. If the analysis shows that market could drop, in such a scenario they can take a sell near that of the high, not near that of the low. So my purpose of giving the expected market moves is only to indicate what could be the possible moves, because many people ask there why not to give the levels and things like that, and the best system for any trader would be their own system. So they have to incorporate various type of analysis, and also they have to perceive the market appropriately and then take the trading decisions, because in trading you come across primarily the risk. As soon as you take a leveraged position, you find the risk associated with that. So when you are taking a risk, whether it is a calculated risk or it is a speculative risk, these two are to be identified. If it is a speculative risk, then the trader tend to become addicted to trading, and later on he may incur a lot of inconvenience. But if the trader is calculating or identifying how much of risk he will be able to take it and try to take the positions accordingly, then he will be able to use the analysis effectively and then earn from that other market. It is not that all the traders have to lose in the market, and you find invariably the statements that 95% of the traders are losing money, and that shows that the emotion plays a vital role with regard to the trading decisions, and they continue to change their strategies from one to another, find out which could be the ideal strategy, and in the process they try to lose money. Instead of testing all those things in a demo trading platform and then try to adapt an appropriate strategy, they straight away jump into that market with the capital and later on look for the analysis or look for various other possible studies, etc. And there again, if they stop trading and then go in for the study of various analysis, they will be benefited. But instead, they experiment with it of the live account. That is the biggest drawback for the traders to lose. But nowadays you come across in the forums and also in the chats of the social networks that people interact and find out what could be the appropriate method of trading. And there again you come across the confusions, because there will be different type of traders. Namely, some might be scalpers and some might be swing traders, some might be session-wise traders, some might be intraday traders, some might be taking the position for the long term. So it is extremely difficult for any analyst to explain what could be the appropriate scalping, what could be the appropriate swing trades, etc. So I give basically the expected market moves with regard to the various sessions. Thereby, according to their type of trades, they can choose if it is meaningful to incorporate as an additional tool for their analysis. Why I am giving this? Because I find that many of the traders, they want the ready-made solutions for trading and earning, and such ready-made solutions may not be available anywhere in the market. If such ready-made solutions are available, then the person who is providing it can do on its own and earn all the money instead of giving to others. So we have to understand the limitations pertaining to that, and then Besides the forecast, if the trader is able to use the trading strategy and limit the risk and maximize the profit, then irrespective of the type of forecast, they will be able to limit the risk as a professional trader. So a professional trader has to perceive the market objectively and always keep in mind that there is an associated risk. So he has to keep the stop or the entry stop at a desired level, so that in the event if the stop is hit, they will be able to absorb the loss without becoming upset. So that is the most important aspect. So when you think of that, if you think only on the positive side where to keep the limit, fine, everybody is anxious. But with regard to the stop, people become skeptical and they say, if I keep the stop, when the market hits the stop, then I'll be vulnerably affected and I may continue to lose the money. And they fail to understand that if they don't keep the stop, instead of losing all the money in about 40 to 50 trades, they may lose it in 1 or 2 trades if they continue to allow the loss to grow. So many of the traders out of experience learn all those things and make it as a costly experience. So my sincere advice will be, I am giving the expected market moves in the blog and also in the webinars, and use it as an additional tool for your market analysis and try to find out how exactly you can take your trading decisions and limit the risk as soon as you take the positions by using stop or the hedging order, and then try to move the stop to the entry so that the risk is first of all eliminated. Then you think of maximizing the profit. Then the fear will not grip in. So this is the humble suggestion I like to give it at this moment, because it is the last month of the year. The market is expected to be very, very volatile, because we know that during the first week and the last week of the month, they make the volatile moves in order to handle the derivative markets, so that you find volatile move on the downside as well as the upside beyond the normal swing size. So when you find about 400 to 500 pips rise or the drop happen in the market, people become stunned and they are not in a position to understand why such moves are happening. Now this is the year end time. So the last month of the year and the first month of the new year, the players are expected to make the yearly trend reversal moves. So when they are making the yearly trend reversal moves, then we might come across a sudden shift in the trading zone, either from that of the lower to the higher or higher to the lower, and then later on they try to exit with regard to the most of the positions what they have got. So what they do is they accumulate buy positions and quickly gain the levels and exit out of the market. So rising the market is an exit strategy for the players, and similarly dropping the market is to accumulate the positions at the lower level. So we need to understand that. So we should not become simply bullish, and we have to necessarily see that we use the trading strategy, limit the risk and maximize the profit. And during this particular month, it is better to do the swing trades, because suddenly they can bring in a very aggressive moves in the market. Now let me explain to you the expected market moves for this particular week, which is derived from the statistical algorithm, so which may go in line with that of the market or go against also. This is basically statistically derived expected market moves. On third, open high and during Japanese session and start making the swing and slide moves during European and US session. And tomorrow, 4th December, they are expected to make a dip during the Japanese session, followed by swing and rise moves. Then Wednesday, again, they are expected to make either way volatile moves to hit the stops on the upside as well as on the downside. Last Wednesday, you would have experienced it. And then 6th, they are expected to make a very quick rise before that announcement of the BOE and ECB interest rate decisions and the ECB press conference, and afterwards you may come across the slide during the US session, and people might think that okay, the market has got the positive clue, so market has to go up, or Euro and GBP are expected to go up. That's what people will think. But the players could say that what is going to be the outcome of non-farm payroll on Friday. So on that basis, they are expected to make the slide. Then on Friday, the weekend, before the non-farm payroll, they are expected to make the quick rise and the volatile moves. And then after the non-farm payrolls, they are expected to make a very quick rise. So ultimately, you will come across the quick drop and the quick rise moves are expected to happen in this particular week, because the last week of the month and the first week of the new month, they are known to make very volatile moves in the market. So you may come across people are talking bullish about the market a day or two, and suddenly people talking about bearish conditions of the market. And the fundamental news could be used as an attribute for such moves, and people might get confused. Ultimately, what is more important for us is we have to take the right and the appropriate trading strategy and right entry and the exit so that we are in a position to earn money. If you are having small equity and see that you are taking only very small 1 to 2% of your equity the positions. Otherwise, keep away from the market during such volatile times so that you will be able to understand the trend, then followed by that you can initiate your trading. Because many of the traders, they earn small monies in scalping and swing trades and things like that, and during trend reversal time they lose all the money. That is why you come across 95% of the traders lose money, because they think that market is expected to make similar moves all the time. They may follow the moving averages all the time, or the supports and the resistance will act as real support and resistance all the time. But we know very well that in the statistical analysis and also with regard to various market studies, people say that the resistance turns support and support turns resistance, etc. That means the market can really behave in an unexpected way. As a result, we may come across such changes. But it is fine, statistically we can derive that market has become bullish and bearish. But are we in a position to earn that money is more important for us rather than worrying about the market. Now, in order to fine-tune the expected market moves, so I have been giving the market reading technique. Make a note of the initial lows and the highs in all the majors and the commodity pairs around 3:30 GMT, and later on use this as a reference level in order to find out what type of moves they make during session start and the early session and the late session, and also during the mid session and in between the sessions the gap time. If you could understand the sequence of moves they do it, and also you come across the more than 30 minutes move, namely the extended move, which are very quick moves, and the intentional move for 2 sessions and the start of the 3rd sessions. So if you could follow that, you will be able to a closer extent take appropriate trading decisions. Now coming to that of the initial lows and the highs, you find Euro formed the low 1.2987 as the low which is higher than that of Friday close, and then subsequently formed a new high 1.3047 and currently holding in the middle level 1.3033. And there is no point in becoming suddenly bullish when the market breaches the last week high and staying above, and So that is how the players hit the stops during session start time. Afterwards they stopped cutting the high. So that we need to understand. Then in the case of GBP, 1.6010 is the low, 1.6048 is the high. They have not breached the low or the high. And similarly, in the case of USD yen, 82.33 is the low, 82.52 is the high. They have not breached the low or the high. Then in the case of CHF, 92.45 and 92.79 are the low and the high. They have not breached it. And Canadian dollar, 99.20 is the low, 99.43 is the high. They have not breached it. And Australian dollar, 1.0393 is the low, 1.0432 is the high. They have not breached it. This 5:20 GMT, what they have found around 4:30, still they have not breached it. And the spread between the low and the high in most of the pairs are very less than 40 pips. So which indicate that they are trying to consolidate around these levels. So what are the expected market moves for today? So they are expected to make open high and slowly slide during the Japanese session. They are pertaining to that of the numerator currencies, that is primarily Euro and GBP, numerator majors. And you know the commodity pairs, now you find the contrarian move happening. So Canadian dollar is showing negative net change, USD CAD is showing negative net change, Australian dollar is also showing negative net change. That means they are making the contrarian move. So when they are making contrarian move, that means they are going to handle the crosses predominantly rather than that of the majors. So there may not be any big upward or the downward move in the case of majors. They will try to make the swings, hold the higher levels and probably briefly make upward stop-ins, and later on they try to handle the crosses. Like last week, the first 2 days they are expected to handle the crosses. Then subsequently they are expected to make either way volatile moves, and Thursday and Friday, using the interest rate decisions from Europe and also from that of the non-farm payroll from US, they are expected to make either way volatile moves in a very quick way and try to earn their money. So ultimately the players are here to make money, and they don't get any reward or punishment when they make Euro or GBP very strong or very weak. And they are here to make such big volatile moves and earn money. So they focus on money. So as traders, we need to understand their weakness and try to focus on money rather than becoming bullish or bearish. So as far as today is concerned, open high and slide could be seen during that of the Japanese session, and they are expected to make a dip and then rise during the late European session, and then high level swing and slide during that of the US session. So it is the first week of the month, so more volatile moves are expected. From the next week, second week of the month, normally they make the trending move, either the upward or the downward move. But this time they will make the yearly trend reversal moves. So the yearly trend reversal move expected to be on the upside in the case of Euro and GBP this time. And afterwards, New Year, they are expected to book profit and drop the market. So that I'll explain it later on towards the end of this particular month. So try to see that you are only doing the swing trades during this particular week and also following days, and not trying to do the position trades unless and otherwise you know very well how to do the position trades. So frequent contrarian moves are expected to happen to handle the crosses in a big way. And you know, the yen crosses, already they made a very significant rise in the case of Euro yen and GBP If you see it, and once people were thinking that USD is a non-performer and hardly give about 10 to 15 pip swings and things like that, but they started gaining the levels and they are expected to make a quick drop and make further rise. And also in the case of USD they are expected to make a very quick rise in coming days. So keep in mind that they are expected to make volatile moves in the case of Euro and GBP, and gain the levels in the case of USD USD CAD and USD Yen with big swings, and Australian dollar they are expected to make the either way moves. You know that Australian dollar was the first one to go up to 1.0476 and things like that, and later on they made the drop. And again you come across when Euro and GBP are showing positive net change, they are lagging with regard to Australian dollar. So this is how they are known to handle, and they may give so many attributes pertaining to that, but ultimately they may say it is because of Australian economic condition which is in negative net change, and subsequently based on the market sentiment it has gone up, and that is how you will come across the interpretations. So don't give much weightage to that of the interpretations. Focus on what they are trying to do in the market, whether they are doing the USD gaining move or the USD weakening move. If the Euro and GBP show positive net change, that means it is USD weakening move, and USD Yen and USD CHF, when they show negative net change, it is USD weakening move, and when USD CAD shows negative net change, it is USD weakening move, but when Australian dollar shows negative net change, it is USD gaining move. So that is how they intend to make the moves in this particular week and also in this month. So carefully handle your positions. That's what I can advise you or suggest you rather. Okay. If there are questions, you can ask me the questions. I am willing to answer to those questions. There is one question here. What is your view on Euro GBP cross? Okay. As you come across in the case of Euro GBP, you already gained the level and still showing 19 pips positive net change around 81 area. So they may go to 8140, 8150 level as an upward stop, and later on they are expected to make the slide. And in the case of Euro CHF, they are expected to gain more levels in this particular month. And in the case of Yen crosses, they are handling on the upside now with a nominal gain, and later on they are expected to make a very quick drop in the case of USD Yen as a downward stop, and before making further rise in this week before Wednesday. And also they are expected to drop Euro and GBP alternatively in order to handle Euro GBP cross. In that process, the Euro Yen and GBP Yen crosses are expected to make a very quick downward move and reverse very fast. So you have to look for the right opportunity when they stop cutting the new low for more than 30 minutes, or during the mid session you can try to take a buy, and they are expected to gain further levels in the case of these crosses. And you will come across aggressive moves happening in crosses. Later on it will come to that of the majors, because it's very easy for the players to handle the crosses, relatively less volume when compared to that of the majors. Then yes, has got a question. What is your view on Aussie dollar? Yeah, Aussie dollar is expected to make either way moves, and as I explained many times, it could be making a swing around 1.0550 to 1.0350 area for a prolonged period, and it is not expected to participate when Euro and GBP are making quick rises, and one of such evidence is now seen. Last Friday as well as today you come across they are simply holding at a lower level here, and they are expected to make downward stopping before making further rise. Then, what is the best timing session for entry? So I explained many times that you watch during the first 30 minutes of the session start time. Suppose Japanese session, you are trying to trade 0030 to 1 GMT, you watch. When they are not breached the high, you can take a sell. When they are not breached the low, you can take a buy in first 30 minutes. And you will be able to see a definite profit to close within the session. Similarly, European session, if you are trading 8 to 8:30 GMT, you watch whether they are near the high or the low. If they are not breached the high or the low, you can take sell near the high or buy near the low, and you will be able to book profit within the session. And that I explained it during that of the Tracking the Forex Market Together webinar times. Then in the case of US session, 14:30 is the start of the session, and up to 15 GMT you try to watch, and then if they are near the high or near the low, if they are not breached in first 30 minutes, near the high you take a sell, near the low you take a buy, you will be able to book profit during the session. Try to focus on swing trades like that rather than trying to do intraday trades. Okay. From AD, do you think euro will end up in the higher trading zone of 1.30 by end of this? No, not end of this week. Probably by next week we should be able to see that euro going higher. This week they will try to make a volatile move. On Friday they could breach the high whatever they are setting in this particular week. So suppose if they show 1.3047 or 1.3070 and things like that as a high, and after making volatile moves they are expected to breach that and close higher on Friday. Next week you could come across more aggressive gaining moves. Then FX. USD CAD and Australian dollar doing contrarian move. So Aussie CAD is sliding, yes. To enter on crosses in midweek better. Wednesday can be a good long Aussie CAD. Okay, as far as the cross trading is concerned, you need to note down the initial lows and the highs on a daily basis around 3:30 GMT. And try to watch during the mid sessions, and if they are staying near that of the low, let me show on cross Aussie CAD. Okay, if they are near that of the low and not breach the low during the mid session for more than 30 minutes, you can take a buy and keep 50 pips hedging order, and once the position makes profit of 20 or 25 pips, keep stop at entry and quickly close it when they are coming to that of the high or making an upward stop in, because they are expected to make alternative moves in order to handle the stops on the higher side above that of the high and stops on the lower side below that of the low in most of the crosses of this nature, especially the commodity cross, as they tend to make either way stop-ins. In the case of Canadian dollar on a daily basis, you will come across Aussie CAD is expected to make similar moves. That is either way stop-in on a daily basis. So when they quickly breach the low and form the new low and stop cutting the new low during a mid-session, you can take a buy. Don't think of position trade like waiting till Wednesday and things like that. Try to close the trade within the session or within the day maximum. Then USD Canada, okay, that I explained it. Then Daurlov Connaught. Is it always necessary to take levels around 3:30 GMT? No, it is not 2:30 to 3. It is actually 3:30. You make a note of the initial lows and the highs. The players are using that as the reference level for their market operations. So if you could note down, you'll be able to read their mindset. It's not my own philosophy or something like that. The players set the initial lows and the highs around 3:30. Then Mohan Kumar, euro may breach 1.29 area in this year, in this week. It may not go drastically below 1.29, but they may do downward stop and like last week, how they had done it below that 1.29, take some stops and then start making an upward move. That's part of the game, because as I explained that they are only doing the money making exercise and not intend to make a very big rise or a drop unless and otherwise predominant of the traders become short sellers or predominant of the traders become long holders, then they try to make big moves. Then Durlav, even for European session, yes, every session you wait for first 30 minutes of the session start time and then try to take the position. You will be able to really see, you will be able to at least keep stop at entry, and 99% you will be able to book profit in such trades. Now that the players have given the bullish feel in Euro Yen, I expect them to move against the sentiment soon. Do you agree? Yes. They are expected to make suddenly a very big downward move. As I explained, that they stopped cutting the high in both the numerator as well as the denominator currencies. So in order to make a contrarian move, and that has been already indicated by that of the commodity pairs. So suddenly they will induce the traders to build a long position because of the bullish feel and make one drop and earn from them and then rise the market. That's what's happening every time. In Euro and GBP they created enormous bearish feel in the name of Greece and things like that, accumulated all the long position and started gaining. When the traders continued to sell during the rise, they found that they are really struck. They know very well how to trap the traders. So don't get trapped. That is what my basic advice could be. Then Derek, we also have to look for a buy or a sell trading during the mid-session after the first 30 minutes, like the early and the late sessions. Yes, in the mid-session, if you are trading in the crosses, you try to wait for 30 minutes how they are handling it, and if they are near low, not breach the low, you take a buy, so that they will not do a downward stop after your buy. The basic idea is that in the first 30 minutes and the last 30 minutes, or the early and the late session, they make either upward stop and before making a drop, or a downward stop and before making a rise. But if they don't do the stop end, it indicates that they are already trapped the traders. So they will only pretend as if they are going to rise, go up to that of the high and then drop. So understand them, and then you will find the trading is a child's play. Okay, FX. Australian dollar CAD, I said Wednesday because Friday close was positive. If it closes negative today and tomorrow, Wednesday could be the good to long. Okay, that's a good understanding. In case if they are making a downward move for 2 days, they don't do the hat trick and they have to necessarily reverse the market. And unless it is not simply closing negative and closing positive with a small pips. And many of the people say that euro has to close above 1.30 for it to go further high on Friday. And now they have taken it above that 1.30. So technically what we may come across as the appropriate understanding, practically we may not, because the players also know such stories and they just pretend as if it has gone above that of 1.30, so that automatically people become bullish based on the technical study. So they want the traders to change their sentiments from bullish to bearish, bearish to bullish, and try to commit positions so that it is easy for them to trap and earn very good money. When all traders turn long with a bullish feel, they can simply drop automatically the stop and the stops they will be able to collect. It is a simple act of men acting against another set of people. Then Yasser, during the drop you are talking about, do you see Aussie dollar get near parity? No, it is not that much of drop. I am talking about another 50 or probably about 75 pips on the downside from 1.04 and then reverse and go up to 1.50 and make one more upward stop and going up to 1.0550 and things like that. So ultimately when they are in the middle level, don't try to estimate anything. When they make a quick drop, then try to find out what sort of move they are doing it and then try to take the buy or the sell positions accordingly, as I explained the various trading strategies. Okay. Then do you offer discounts for your premium membership forecast? I don't offer any discount with regard to the forecast, what I am giving it, because it's not a place to market my platform or the website, but still, since you are asked, I am telling you, I don't offer any discount, but I give much more value and see that they earn much more than that of the subscription during the subscribed period. That assurance I can give. Okay, no more questions. So let me go to the last slide. So I'll come back on Thursday, December 6th and try to do yet another session of Asian session live market analysis and try to review what I have given as the forecast today and also try to explain to you what could be the market moves on Thursday and Friday. You know that Thursday is an important day, namely the ECB and BOE interest rate decisions and press conference are going to be there. Besides Friday, the non-farm payroll, how exactly they are going to make the moves based on my derivations. And it may happen or may not happen. Keep it in mind that not 100% it will happen and probably to a greater extent it will happen. So use it as a guiding factor. So I take this opportunity to thank FX Street and you people who have come here to listen to my webinar. See you all again on Thursday. Till this time I'll be updating in my blogs on a daily basis. If you've got any questions, you can ask in the blog the questions. I'll be willing to answer to the questions. And basically my intention is facilitate the traders and to take appropriate trading decisions, not giving the signals in the open forums and things like that. Thank you one and all. See you on Thursday.